Yeah, welcome back. We're still on daily time frame, and you can see here that this is a support level that was formed. And when you go to the past 7 days, candle, you can see from the recent one now 1, 2, 3, 4, 5, 6, 7. You can see that this is a support level. So, assuming you enter the market around this place where I place this cursor, if you enter the market around this place, I expect you are expected to have your stop loss a little below it. When you have your stop loss a little below it, then you will be safe from first breakout. So that's the daily chart, and then you can see that this was the resistance level. It was broken by the candle that formed yesterday. It was broken, the level was broken yesterday. Now if this recent candle keeps going up, if it's bullish, if you maintain the bullish trend, the level will be completely broken, and when it is broken, we'll be targeting this resistance level. These resistance levels will be targeting this place. So as a trader that entered around this place, or even yesterday, you'll be anticipating this level. Now don't forget, this is a resistance level. Merely drawing a line here, you can see resistance level. Even by looking at the lines in this chart, you can see that it's forming resistance and support levels. Hope you're following. Now when you make the chart smaller, you can see in an uptrend, this is an uptrend. This is a strong uptrend. In an uptrend, you have high highs and high lows. What that means is the high level, a recent high level will be higher than the high level of the previous high. It means a high level now will be higher than the previous one. That's the meaning of high highs. And also the high lows means the low level will be higher than the previous low level. Let me explain again. Now, in a strong uptrend like this, you have this place as the support level. You have this place as the resistance level, and you have this place as the support level. Since the price was rejected here, it moved up again and broke this resistance level. Now another resistance was formed here. Price was rejected here again and formed another resistance here. Rejected here again, form another resistance. Rejected here, form another resistance at this level. Got rejected here again and forms another resistance here. Now the price trend down again, got rejected, also formed another resistance. Hope you're following. Now talking about the high highs and high lows, it means this was the high level, this was another high. It means this high level was higher than this is what we call the high highs, high. And if you see the following one, this high level was higher than this. Do you understand what I mean by the high and high lows now? Okay, this is a lower level, this is a lower level. This lower level was higher than the previous lower level. That's what we call the high and high lows. And you can only find the high highs and high lows in in an uptrend in the market that is bullish. Now, if you look at the past 7 days and you switch to your weekly chart, you see that the market was bullish. This was the past week candle. This was the past week candle, and you see that it was bullish. That is it. And when it is bullish like that, the price got to this point and it got pushed down and closed here. I hope you see the closing. It ranged up and it got pushed down and closed. It means if you look at the highest point here and then switch to daily chart, it will give you another high point here. Can you see? That's it. Don't forget, target the resistance level and support levels. As you can see, we are not making use of any indicators now. Now, in a daily chart, if you are analyzing with the daily chart, you already know where the resistance level is. For the past 7 days now, we have the resistance level here. And if it happens that the price comes down and it breaks this level, it means it will form another support again at this level. If that support is broken, it will form another one below it, and that is a bearish trend. Now, before we include indicator, let me switch to 1 hour chart and show you. As you can see, this is support level, this is resistance level. It forms another support level here. You can call this one a major support level because it was the level was tested twice. That's a major support level. You can see another resistance, support, major resistance level here, big one. And when the market got to 32, then it comes down here, got rejected around this place, and now the market is consolidating. What I mean by consolidating is that the trend is not going so high and it's not going so low. It is just going sideways. When the trend is going sideways, it's not high, it's not low. You can see the candlesticks are not so higher than one another, and keep going like that. That's forming a consolidation. And when a consolidation is forming, and the daily and weekly chart is still bullish, expect it to break up. And when any candle breaks up, the candle can break up again. If any of this candle form in the next maybe 1, 2, 3 hours and it breaks up, expect it to form to meet a resistance at this level. And when it breaks that resistance, expect it to meet this resistance. And if it can break this resistance, expect it to keep going high. Now, because the trend for the past 3 days, the trend is bullish, that's why you can have because for the past 3 days the trend is bullish, that's why you can have a strong uptrend here. You can have a strong uptrend here, and you can see if you check this section, if you count it, if you're able to count 12 candles, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. From this point here, it formed a day, that's 24 candle. And when you switch to daily charts, you can see yesterday it was really bullish. The candle opened and keep going up like that. Yesterday was really bullish. Now that you know the resistance support level in daily chart, weekly chart, you switch to your hourly chart. You know the resistance and support levels again. If you enter this consolidating market, if you enter it around this place and maybe the market recovers and start forming a bullish trend, the point where you'll be targeting is this. You'll be targeting this point 32, and when it breaks that point, you'll be targeting the higher level. You'll be targeting a higher level. Now, to get the higher level, you will need to switch to daily or weekly chart. Now, when you switch to daily chart, you can see the higher level you'll be targeting is 36.9, and when that level is broken, you can expect to have the price at $40. That's it, guys. That's resistance and support level made simple for you. When you want to use resistance support level, you make use of your top-down analysis also. Start from bigger time frame. From there, weekly charts, go to daily charts. What's the resistance support level? Go to hourly charts. What are the resistance and support level that has been formed? And don't forget, the resistance and support levels are where pro traders, where smart money. By smart money, I mean professional traders that have lots of capital to enter the market with. Ways in the market, those ones are people who call smart money. Ways in the market can manipulate the market to the way they want. For example, someone like Elon Musk. You know how the market changed when Elon Musk bought $1.5 billion worth of Bitcoin. Elon Musk is a smart money in the market. It's a way and can manipulate the market to go whatever way he wants. So, assuming the trend is organic, by organic I mean if there's nothing so serious fundamentally affecting the market, either positively or negatively. Positively is in the sense that bullish trend, and negatively in the sense of bearish trend. If there's nothing of such, then expect your resistance and support level to be respected. By respected, I mean expect them to work so well for you. And when you are working with your resistance support level, always make use of your stop loss. How do you use your stop loss? If you are trading on 1 hourly chart, now this is a daily chart. Suppose you enter the market around 27.5 and the price presently is $31.04. You can have your stop loss around 25, depending on your risk management level, depending on your risk absorption, depending on the level of risk you can absorb. So if I were you now, since spot trading section on Binance do not have trailing stop order. The trailing stop order works like this. Now, if I bought this coin at 27.5 and I put my stop loss $2 below it, that would be 25.5. since the price has risen and the market gone has not gone or touched my stop loss, trailing order will just keep increasing my stop loss, increasing in such a way that, okay, since I put my stop loss on 25.5 and the market is going up, when the market goes up like $2 increase, my stop loss also will be shifted up. When the market goes up for another $2, my stop loss will be shifted up. For like this, in the case of Link USDT presently, if I put my stop loss, if I enter the market at 27.5 and I put my stop loss at 25.5, my stop loss now will be around 27.5 or 28. Now if the market keeps going bullish, so also my stop loss will be shifted up. It will be trailing, just like following. It will be trailing the price. It will be trailing the price. So if peradventure this market gets to 36.5, my stop loss will be around $30.5. That's how trailing stop works. And if when my stop loss is around that $30.5, I bought it at 27.5. I made a $3 increase on one chain link. So if that $30.5, which the trailing order formed as the new stop loss, if that price is hit, if the market trend down and the price was hit, I'll still make profit of $3 per one. That's how trailing stop order works. But since there's nothing of such in the spot market or spot section of Binance, when you want to put your stop loss, don't make your stop loss too close to the price you enter the market. If your stop loss is too close to the price you enter the market, it's the probability that it will be hit, that your stop loss will be hit, is so close to 1. And when your stop loss is hit, you keep losing. When you lose $2, enter the market again, you lose $2. By the time you add it up, that's a lot of money. So when you're placing your stop loss, place your stop loss below the support levels where you enter the market. Let me repeat that again. When you are placing your stop loss, place it below the support level where you enter the market. Now, when you place your stop loss, you don't just neglect the market. You keep monitoring. Set price alert to keep monitoring it. Now, depending on the kind of trader you are, if you are a scalper, if you are a swinger, if you are a day trader, if you are a position trader, that would determine how long you stay in the market. For example, I'm a mixture of day and position trader. I can hold the coin for 2 weeks, 3 weeks, 1 month before selling. And in some cases where I need money, can be trading the coin every day, buying and selling every day, following the daily and weekly chart. That's the kind of person I am. Now you need to know the kind of trader you are. Maybe someone that you want to be making your money, maybe $2, $5. Maybe you are a swing trader, you are a scalper, you want to be scalping the market. That depends on you. Knowing the kind of trader you are depends on you. Now don't forget, when you are placing your stop loss and when you are using bigger time frame to analyze the market. For example, in a daily chart like this, if you enter the market around this place, placing your stop loss around this place isn't bad. The reason is smart money traders, when they want to enter the market, smart money traders don't enter the market anyhow. When they want to enter the market, they target the support level, they target the demand zone, because that's the price people will be putting their stop loss. I just see that the market gets to that stop loss, your stop loss is hit, and immediately the trend keeps pick up again and start going up, and you'll be wondering, oh, I shouldn't have used stop loss. That was because you just fall into the hand. You become a victim, you become a prey to the smart money traders. Make your stop loss below the support level and always watch the market. Now guys, you now know how to use resistance and support level. Again, I said when smart money traders want to enter the market, they target the when they want to enter the market, they target the demand zone, which is the support level. And when they want to exit the market, they target the resistance level, which is the supply zone. That's the point they want to exit the market. That's the point they want to exit. And when they exit that market, some people who are not aware of how things are going in the market will also fall prey to them. For example, smart money trader always in the markets, they will announce on their Twitter, on their Facebook, on their Instagram, on their any social media, and when they want to buy, because they have a lot of followers, millions of followers. When Elon Musk wanted to buy, as a matter of fact, he might have bought the coin before announcing. Now people will know, okay, Elon Musk has bought so amount of Bitcoin. How many of us now know when Elon Musk will sell, or when Elon Musk has sold? And if you want to be aware, even if you announce the time you sell the coin, you will have sold the coin before the announcement. So people following blindly will also have themselves to blame in the market. Still on the resistance level, when you are taking note of the resistance level, use your bigger time frame. Just like I did, you can start from 1 week chart. You see what is in 1 week, what's the resistance level, what's the resistance level in the 1 week, what's the support level in the 1 week. Now switch to daily charts. What are the past resistance levels? What is the major ones the market is looking to break? And when you enter at the support level in a daily chart, target the major resistance level as your point of exit. When you enter at the support level, target the resistance level as your point of exit. That's just simply how you can use the resistance level. You can see that without using indicator, you can use your resistance level to enter and exit the market. But you can't use your resistance level alone without a sound knowledge of candlestick pattern. You may need to go back to your candlestick lesson, and I will be sending 2 books by FSTM. That's the forex broker I'm using. One on bearish pattern and one on bullish pattern. Try to review it. Try to master. When you master the candlestick pattern, making your trading the market using resistance and support level will be so smooth for you. Now, about resistance level and candlestick pattern. The candlestick patterns you find at the resistance or support level are stronger than those that do not form at levels like that. For example, let's look at this section. You can see this. Do you still remember the name of this candle? This one is a doji candle, and if you still remember, this is a neutral candle pattern. By neutral, I mean it signifies a consolidated market. And when you have a consolidated market, the trend can go in any way. The next candle can go in any way. Now, when you see this in a daily chart, it means the trend can go in any way. When you see this in a daily chart, if you are me, or if I were you, I will be patient. If I want to trade this coin, I will be patient till the next day. I won't just enter the market. When you want to enter the market, you don't have to be hurry. When you've not entered the market, your money will be in your wallet. Nothing will happen to your money. The market may go up, it will still come down. You will never be left behind. You don't have to be in hurry. You don't have to be in patience with entering the market. Entering the market is so important. When you enter the market wrongly, you are going to exit the market wrongly or lose some money, or stay too longer than expected in the market. Now, coming back to candlestick pattern. Now, if I were you, the last day before this pattern, we have a spinning top. Also. We have a spinning top and bottom. Suggests a consolidated market. This red one here, and the next one that forms a doji pattern also suggests a consolidated market. Now, when you switch to MACD and RSI, now when you analyze this, you can see when I put the cursor indicator on the doji pattern, the RSI was 70, as you can see, and the MACD was just fading out. The bullish trend was fading out. You can see anyone that entered the market at this level now, we end up blaming him or herself. You can see the importance of candlestick pattern now. The candlestick pattern forms at the resistance level. So important, so strong. Now, when you compare it with your indicator, you can see MACD is fading out. The bullish trend on MACD is fading out, and the buying volume of MACD is becoming low. I'm not expecting you. We are not expected to enter the market at such price. You don't have to be impatient. You don't have to be in a hurry. I'm repeating it. You don't have to be in a hurry in entering the market. Keep calm, analyze the market, then place your trade. Now, when you analyze this market, you can see the last two candles. See on this place, the last two candles that formed was one doji and one spinning top and bottom, and those two candle patterns suggest consolidated market. And the consolidated market, the market can go in any way. So when you say consolidated, when you see a candlestick signifying consolidated market, all you have to do is wait, stay off, and watch the trend. Watch the next candle. And since this is a daily candle pattern, you wait till the next day. And when you are using the candlestick pattern, comparing it with your MACD and RSI, you can see what the market is saying. The market is saying you can't enter. And even if you use your Bollinger Bands, you can see Bollinger Bands also gives you the idea of where the resistance and support levels will be formed. I hope you are following. At the end of this video, I don't expect anyone watching this to still have trouble using resistance and support level. The only thing I'm not doing in this video now is drawing lines, which I have already explained in the article accompanying this video. I hope you're following. Now, if you want to see the candlestick pattern also, your weekly chart, a week is like 7 days. Nobody is going to wait for 7 days before entering the market. Now, before this candle closes, the last candle before it closed, the last candle before it was on 8th of February, which means it will close by 15th of February. Now the next one will open by 15th of February. And when the next one open by 15th of February plus 7 days, that's like 23rd. This one open by 22. Okay. Open by 22nd of February. Now, if you are not in this market, if you are not entered this market before 22nd, 21st, 28th, if you are not entered this market and you are just seeing this chart, forget about this past 3 weeks here. Focus on this. Now, if you are seeing this chart or analyzing this chart by 21st, 28th, I expect you, this is a weekly chart, I expect you to relax and stay back, or even look out for other potential coins, other coins that perform very well. Now, this is a dodgy pattern. You can also call it a spinning top and bottom, and which suggests a consolidated market. Suggests a consolidated market means the next trend can either be up or down. So you are not expected to enter such market until the next candle opens and closes. Now, seeing this, if I were you and I see this candlestick pattern in a weekly chart of Chainlink, I'll just relax. I either keep my money, leave my money there, or look for other coins to trade. Now you can see the following week it was bearish or true. The following week was bearish. Now, when you use your indicator with this, you can see what the MACD, the volume was high at that level. The volume was high at this level. So, and the RSI says 80. The momentum was high. And when the momentum was high like that, expect it to come down. Expect the force, expect the pressure to cool off. That's why the next week was bearish. The next week after this was bearish. Now, because we have a consolidated market, the people buying and selling, the pressure are up to each other. We have a consolidated market, and in a consolidated market, anything happens. So, since you see this in a weekly chart, just cool yourself and wait till the next candle opens and closes. So, assuming the next candle opens and starts an uptrend, you can enter the market. But you can see that week was bearish. So anyone that entered the market at the opening of this bearish candle around 34, we meet him or herself at 24. That's minus $10 per one. And such person, there will be panic selling if such person do not know how the market is going, or is poor when it comes to risk management. There will be panic selling. Excuse me. Now you know what is happening in the weekly chart. You just switch to the daily charts, then you see what is going on. The daily chart is just 24 hours. You can still wait for 24 hours before entering the market. Can you see? You can see that this present trend is trying to go bullish, trying to overpower buyers, and this trend is trying to overpower the sellers, but it's still slow. Now when you switch to early charts and then at the support levels, at the resistance level, you look at the patterns of the candlesticks. Bearish candle pattern at the support level stronger than bearish candle pattern at the resistance level. Bearish candle pattern at the resistance level is stronger than bearish candle pattern at the support level. When you know the resistance and support level on different time frame, let me repeat that again. When you know the resistance and support level, when you know the candle patterns on different time frames, what are the candle patterns saying? If you check the last week chart, okay, if you check the weekly chart, is the candle pattern bearish or bullish? Is it consolidated? If you check the daily chart, is it bearish, bullish, or consolidated? Now if you check the hourly chart, is it bearish, bullish, or consolidated? Your answer to those questions will give you a go ahead to either enter the market. If you already entered the market before, it give you a go ahead to either exit the market. If you are planning to enter the market, so it also gives you a go ahead to either enter or stay off the market. That's what resistance, support levels, candlestick patterns will do for you, guys. Excuse me. I hope you're following, and I hope you understand the usefulness of resistance levels and candlestick pattern. Now don't forget to master your candlestick patterns. A sound knowledge, good knowledge of candlestick pattern will help you in making your decisions in the market. You know, the major goal of any technical analyst is to catch the trend before the trend begins. You are in the market to catch the trend. You are not in the market to follow a bullish trend. A bullish trend has already begun. You are okay, it has begun, let me buy. No, you are there to analyze the market. You are there to know, okay, the next 2-3 days the market will be bullish, and then maybe 2 or 3 days after that the market is likely to be bearish. That is an analyst talking. You are there to know what will happen and what is happening in the market. You are not in the market to follow crowd. Taking this course and watching this video should give you edge over those who have no knowledge about what resistance and support level means. And now, if you want to have better grasp of this topic, if you want to make the money you want in the market, excuse me, sorry about that. You don't have to be dabbling from one coin to another. For example, if you are someone that has just $50, I expect you to a coin pick coins that the values are less than $100. Pick coins like that, analyze it, and just enter one. Then trade one. Focus on one. Focus on one trend. Focus on one coin. Sorry. When you focus on one coin for a week, 2 weeks, 1 month, to give you better understanding of the market of that particular coin. Then it helps you to know, to catch the trend before it begins for that particular coin, because you are always monitoring that coin, you are analyzing it. Okay, you will know when that coin is bearish, you will know when it's bullish, you will know when it is consolidated, you will know when the bullish trend is about to begin, you will know when the bearish trend is about to begin. That's why you need to focus on one particular coin. Stop following crowd. You don't have much, you don't have more than $50. Don't follow people trading with $500, $1,000, $1,000,000. Those people can buy as many coins as they want. You, with your little dollar, you want to make sure you maximize your profit. You want to make sure you make more profit than loss. That's why the smaller your capital you want to invest in the market, the lesser the number of coins you will be trading. Just face one coin if you don't have more than $50. Now, if you have like $100 to invest in the market as your capital, excuse me, if you have like $100 you want to invest in the market as your capital, just pick two coins that the values are either below 100, or maybe the values are like 20, 30, $50. Pick two coins with your $100. Then keep following that coin. Keep following them. Imagine if you have been following BNB since the beginning of 2021 or since August 2020. Imagine if you've been following it. Imagine if you stick with it. Imagine if you'll be following Litecoin from when it was $50, $25, $30. Oh, why am I coughing? Sorry about that. So that's why you need to be focused. You don't jump from one coin to another, from one to another. You need to be focused. You don't necessarily have to be trading every day. Although it depends on the kind of trader you groom yourself to become. But whatever kind of trader you are, dabbling from one coin to another with a little capital will not be helpful. That's it, guys. That's it about the resistance and support level. And to wrap it up, don't forget, when you want to analyze the market using your resistance and support level, start from a weekly chart. You see where the last support level and the resistance level was. Excuse me, I'm sorry about that. You go to the daily charts, you also look at the resistance and support level. You know where they are. Go to the hourly charts. You are probably going to enter the market with a 1 hour or 30-minute chart. You look at the resistance and support level. Now, for the kind of trader you may be, if you are a scalper, you want to be scalping the market, after using the weekly, daily, hourly chart, you may stay on 30 minutes time frame and be trading the market. you don't want to keep your coins in the market at all. You want to be trading, you want to be entering, exiting, entering, exiting. Now if you want to keep your coin for like 3 days, you will work well with daily charts. You do your thorough analysis with daily charts. Now if you want to keep your coin for like a week, 2 weeks, 1 month, 3 months, you work with your weekly and monthly time frame. Now if you want to be trading daily, if you are a daily chart, you want to maybe you enter the market now. Okay, you've noted the resistance level where you are likely, the market is likely to be, or the price of that coin is likely to be rejected. Take note of that. You enter the market, and when your order got filled, you set your limit sell order around that level. Make use of your resistance support level. And now don't forget the candlestick pattern forming at the resistance support level. They are stronger. And when you see a bullish candlestick pattern at the support level, don't forget also you are using 1 hour time frame to enter the market. Before you enter the market with your 1 hour time frame, make sure the candle closes. Don't enter at the middle. You know how to calculate your time, right? For example, the time now is 11:25 and this candle will close by 11:59. So if you want to enter the market with this candle now, I expect you to wait till 11:59 to see where the candle will close. The candle may end up going bearish, or it may end up going bullish. So for example, if you enter the market now and the candle end up being a bearish candle, you feel bad and you'll be panicking. So that's why you don't enter the middle of the market of the time. Let the candle closes before entering. And since you know this is a consolidated market, I expect you, when you say consolidated market, just stay off and let the trend be significant. Now you can also apply your technical indicators. Technical indicator presently RSI is 56, so the trend will still go up. Even if it will come down, it won't pass excuse me, it won't pass this level. Even if it will come down, that's support level. If that level is broken, then the market is going to be bearish. Now you look at your MACD also, you can see the selling power is diminishing. Selling power is diminishing. This is what this MACD is telling us. You can see the red histogram saying the selling power is diminishing. You can see it's consolidating, just going like it's going a straight line. Now if you look at the Bollinger Band, you can see the Bollinger Band is shrinking. If you've forgotten what I said about the shape of the Bollinger Band like this, kindly visit the article or the lesson on Bollinger Bands. In a case like this, the market is quiet in this case, and when the market is quiet, means the market is consolidated also. Now you go to your, this is my customized MA moving average. This is a moving average 20. You can see that when the candle closes and above this MA moving average 20 line, you can see it here, you can see the value here. Sorry. When the candlesticks are above it, suggests a bullish trend. And you can see the candlestick was far below here, but now moving closer. No, don't forget I told you the market is consolidated. That's why. So when you see the candlestick breaks this MA moving average 20 line, closes above it, another one opens and closes above it, suggests bullish trend has begun. Now, since I'm focusing on this coin, since I'm not jumping from one to another, so I'm focusing on this coin, I'm going to catch the trend when it began. I'm going to catch the trend when it begins. That's the importance, that's the advantage of focusing your attention on a particular coin. You can see, sorry, I already know what the market is saying here. So that's it, guys. That's it. Resistance support level is not that difficult. Please make sure you watch this video to the end. If you are watching this video to this moment, you really mean business. You are dedicated, you are determined, and you want to learn more. Please keep it up. And that's it, guys. That's it about resistance support level. If you have any question, this video is only meant for premium and basic subscriber of mymoneybot.com. So if you have any question, kindly drop your question in the comment section, because this video will be embedded in a blog post. Drop your question in the comment section, or you drop your question in the group. That's it, guys, about resistance and support level. Again, if you have any question, please drop your question in the comments or in the group. See you in the next video.